The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 28th. Can you believe it, folks? May 28th. Terrific Tuesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools, well, just simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, really, when you think about it, what better way to live? Lead an inspired life. So let's go look at one of our tools. Actually, let's go take a look at the fundamental tools of success. Really kind of breaks down into four primary thought processes. The first one, character. Character isn't something you were born with, such as your fingerprints. Think about that. You weren't born with character. You certainly were born with your fingerprints. Therefore, it's something you can change, right? We can't change our fingerprints, but at any point in time, we can change our character. But first, you must take responsibility for simply forming it. How about this? If you don't make plans of your own, this is number 2 out here. You know, one of the this is a fundamental rule of success. If you don't make plans of your own, you'll fit into someone else's plans. Think about that. Think about that for yourself, or think about that for your loved ones out there. Question: what do you think they have planned for you if you're not fitting into your own plans? Probably not much out there. Now, let's take a look at this. Of all the possibilities of greatness, whether it be great wealth, great reputation, great satisfaction, well, all of these things come when you turn your attention from yourself to others. That's what it's all about here at TFNN. I know that's what it's all about in your life as well. And lastly, let's take a look at this. A courageous person, which I know you are, a courageous person is not someone who never feels fear. Certainly each of us have felt fear at one point. Sometimes if you're trading these markets, you might feel fear several times during the day. Well, a courageous person is not someone who never feels fear, but who fears the right thing at the right time and in the right way. Folks, I hope you had a great Memorial Day weekend out there and that you're poised for a wonderful shortened trading session week here. The market, certainly, we had the full moon come in on late Friday evening, I believe, and the markets are in, full blast-off mode, taking off to the moon. Oh, how about that? Got a piece of dust or something in my throat here. But we're going to go find out where these markets are going to. We'll take a look at the patterns out there. Our pattern, sorry about that, didn't mean to do that in your ear. Our call-in number here is 877-927-6648. So let's go take a look at these markets. They are going to gap up this morning. You're going to have the Dow is going to move up maybe about 125 points or so. Right now, the Dow futures trade out at 15,424. That's up 117 points. S&P futures up about 14, trading at 1664. NASDAQ futures up 28 points, trading at 3020. Russell 2000 up about 11, trade at 996. King dollar on the move here this morning, up about 12 ticks. The euro relatively flat. Biggest movement in the currency market is in the yen. So we'll take a look at the yen. You've got gold trading off about $4 in the 1382 range. Silver down about 12 pennies at 22.37. Light sweet crude up $1.27 right now. That's up 95. Not 95. That is trading at 95.38. If we take a peek around the world here, around the globe, Europe, over in Europe, you've got the DAX up about a little over 1%, 1.2% out there. That's up 100 points. The FTSE up 1 0.8% up there, up 119 points. Last night we had the Nikkei up 1.2%, but the Nikkei's in big trouble, folks. So the mere fact that anybody's going to report that the Nikkei was up 169 points, wait till we go take a look at that stock chart out there. You had the Hang Seng, that was up 238 points. That was up a full percentage point. The Shanghai up 1.25%, up 29 points. It is never-ending. Markets move higher on Tuesday. Tuesday looks like maybe this Tuesday will be 20 in a row out there. Again, our call number is 877-927-6648. Let's go start with the big dog out here. Let's go start with the Dow futures. Oftentimes we don't pay much attention to this. What is it forming out here? Well, right at the 15,430 mark and change. And so far we've had a move. The high so far intra-session we'll call it as we came into this 9:30 session, has been 15,427. Now, the number I've got marked on my screen is 15,430. At 15,430, you've got a 0.786 Gartley sell pattern. You also have a 1.618 expansion of your B to C swing point. You say, Steve-O, what is a swing point? Well, folks, a swing point is nothing more simple than this. It's where you see a significant change in trend in the marketplace. We most certainly saw that here, where this may have been a little bit of a blow-off top when Uncle Ben Bernanke came out and announced whatever it was he announced. But if we just take a look at the 10:30 session here coming in on May the 22nd, this is the 30-minute chart that we're looking at. You saw the Dow futures move up to 15,523, and then you saw a sharp sell-off. That sharp sell-off, so if we take a look at that highs, we're looking at 15,523 coming during that 10:30 a.m. session out there. If we go from that high, because that certainly is a swing point, we see a significant change in trend. In fact, the Dow futures went all the way from that high of 15,523 down to the low on the 30-minute chart that came in at 3 a.m. on May the 23rd out there, 15,143. If you were to take your retracement ruler, I'll just simply go ahead and do that and go from the top down to the bottom, so the high to the low. What you'll see is really at 0.786, the number is 15,442. So somewhere between, let's say, 15,430 and 15,442 is a normal pattern. A normal A to B equals CD, a normal retracement pattern. No, on retracement patterns, you're typically looking at the these 0.618 or the 0.786 levels. 0.618 is more normal. But in a Gartley pattern, you've got to have an A to B equals CD. There's a couple A to B equals CD patterns that we can see here in the Dow futures. Number one, if we start off from our low out here at that 15,143 mark and go all the way up to a B point, that is where we saw the market move back up, bounce back up into the time period of, 2030 would be 8:30 in the evening on May 23rd. That price is 15,334. That's your B point. Your C point is that little hammer candle down here, down at 10:30 in the morning on May the 24th, that level 15,181. Well, you can see that the 15,371 mark, that was your 1-to-1 A to B equals CD. 15,378 would have been the 0.618 retracement from that original high that we were taking a look at to the low. But as that price area was being hit, which was at 3:30 this morning out here, no bears were up. They were all out still at the Hamptons, I'm sure. Both the bulls and the bears out at the Hamptons. So at 15,378, there were no bears, and that says, well, if you're not going to stop here at 15,378, in fact, during that 4 a.m. session, you had a little bit of a wide-ranging bar. Wide-ranging bar coming into what? Coming into the 1 to 1.272 A to B equals CD. Coming towards that 0.786 level out there, 15 to 442. We can see here the market is in overbought territory. Just taking a look at that relative strength weakness or relative strength indicator out here right now. We're on the relative strength side of it. So it is in the overbought territory. Now, you wouldn't sell this right here. You wouldn't sell this until you actually saw the bears show up for work. And so far, they're really not around as we take a look at the Dow futures. Now, let's go take a look here at the other futures contracts, because you got a 0.786. In fact, if you're watching us on TigerTV, I'll do this right here, right now. We'll put it into my 4 little quadrants. So if you're watching us on TigerTV, and if you're just listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can always get this show streaming live to you by going to the homepage of TFNN.com. Over on the right-hand side, what you will see is a little box with a button with 3 smartphones. Click on that. This show will go ahead and stream live to you. We're taking a look here at the 4 EKGs of the marketplace here. Upper left is the Dow futures. Upper right is the Russell 2000. A little bit of a delay there, about a 10-minute delay on my system right now. On the lower right, you've got the NASDAQ futures, and the lower left, the ES Mini. On the NASDAQ futures, on the Russell 2000, and on the Dow, you can see all of them making the same 0.786 Gartley sell pattern. Now, when I say making it, I mean forming it. It's a pattern that's formed out here, but you don't necessarily take, my opinion is you don't take that trade until you actually get confirmation of it. In the lower left-hand corner, we're taking a look at the ES Mini. Now, that ES Mini out here, that, folks, has got 2 patterns out here. Maybe they all have 2 patterns as well. I'm just showing the 2 patterns here inside the ES Mini, which is a butterfly pattern. Now, that's a butterfly pattern is the expansion off of this little B point out here that came in on May 23rd, that high at 1655.25. So you've got a 1.618 butterfly cell pattern. You've got a 0.618 Gartley cell pattern, all coming in right around the price point of where? Of that rising price channel. And as you know, when you break a trend, when you break a price channel, that typically price is going to try to get back inside. Well, today is going to be that day when the ES Mini attempts to get back inside here. Now, you've got the other three at the 0.786 retracement. The other three being the Dow, being the NASDAQ, being the Russell. And the ES Mini here is trying just simply to form the 0.618 level. If this fails from a bearish standpoint and it moves higher, well, the other indexes, you can expect those, at least the other futures contracts, you can expect those to actually go up and make a 100% move of a move and go test those highs out there, but not so fast. Now, we come back, we're going to take a look at this ES Mini here. We're going to take a look at where price moved down. We're going to take a look at the hammer candle that came in here at 10:30 in the morning on Friday's session, and we know that was coming up against an area of support. Areas of support where we were talking about those on Friday morning. 877-927-6648. Let's see. Popping here in the pre-market. You've got Valiant Pharmaceuticals because of a buyout. Apple's trading up. Tesla Motors trading up. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Hope everybody out there had a great holiday weekend. Maybe some of you are still on vacation and just letting summer just kind of kick in. With revenue numbers before the bell, we had Tiffany and Company. There's been some folks out there buying some of those blue boxes. As we take a look here at the numbers they reported, net sales $895 million versus $819 from the prior year out there. Their earnings $89 million versus 81.5. They're trading up 6% this morning. Their ticker symbol is TIF out there. They closed at 76.21 on Friday. Right now, last trade just fired off at 81.20. Now, we'll go take a look at that Tiffany chart. Maybe we'll take a look at it as the market opens. I want to come back here to the ES Mini, maybe help you, when we took a look at Friday's action as the market was moving down, what we knew was we knew where the bulls were hanging out. So I'm going to go ahead, from my screen here, I'll go ahead and take these patterns off, just simply to make it a little bit easier to see out here. Now, what we know is this. These are the facts. Number one, on the bottom of the screen, I should say kind of like the middle lower section here, that little red squiggly line that we've got going on here, that's our relative strength indicator out here. And we know that you should be looking to, sell when it's above the 70% level. You wait for bears. You should be buying when it moves down to below the 30% level. Now, we look at it on this 30-minute chart here just simply because, and I'm not suggesting that you be an intraday day trader or what have you, but we can use these intraday charts here to help you to guide yourself with regard to looking for buying opportunities or potential selling opportunities out there. Very important to put together different trading patterns. You don't use just one indicator, and you simply you want to make sure that you are aware of where the bulls and bears are hanging out here. So as we take a look at the lows coming in, what we see here, we saw that 3-candle pattern. This was after the market was selling off, after the reaction to after people rethought what tapering back might mean in the markets out there with regard to the Fed. Markets move down, get into that oversold territory. You can see right back here the very first time, right around the 2:30 time frame on May 22nd out there, as it gets down into a low of 1647.25. Your relative strength indicator was at 29.99, so down towards that 30 level. Now, the very next candle that formed out here, this is actually a bullish candle. It's called a piercing candle out here. But what we know is you've always got to be careful about a wide-bodied on the way down here. This was the bar that took you into 230, and this little bullish candle. And I say little bullish because, you only really pierced about halfway. In fact, you had to pierce halfway into the candle session from that 230 area. And you always want to be careful because when trading, this is my experience, ton of experience. When you are trading with inside the body of a candle out here, in this case, the body is really the essence of price. Forget about those emotions of the wicks, the upper extreme and the lower extreme out here. But when you take a look at this, really what the ES Mini did was it traded inside the body of that candle, never closed above it, and then it went ahead and made its next move down. And as it was doing that, all it was doing was working off its oversold condition. Then it goes ahead and makes its move down, and then we start to see some bullish candles again show up here. We see the 3 River Morningstar candles. That's these 3 candles here from 4:30 to 5 a.m. to 5:30. We saw that 3 session. We saw the next one come in right down here at 9:30 more. This is on May 23rd, by the way. May 23rd at 10 a.m. and then finally here at 10:30. So now, as the market was moving down on Friday out here, and as was coming into the 10:30 a.m. session, And we know that this is an area here where we saw the bulls defending their position. You knew what that general area was. Well, look at what happened as the market moved down into 1030. Got that little hammer candle as it made a low at 1634.50, closed out at 1637. And what do you have on it? And what was the RSI doing here? Was right down at the level of about 32.4. So down in that 30 range. And then what's on that next candle? You got your bullish engulfing coming in at 11 o'clock. So we know that this is an area. Why is this important to even go over here right now? It's important because if this low gets taken out, if and ever this low gets taken out, you will know that it is a defended territory of the bulls that they have just simply given up on. Now the question is, where are the bears hanging out? Well, if you come back here, you can see that we are above the set of swing points coming into the session here at about 6:30 in the evening on May 22nd. All that if you go back to the left-hand side of the chart, really the only bearish candle out here, yes, you've got this little waterfall conversion, but the real bears showed up on the 30-minute chart, really right above here, right about 12:30 time frame on May the 22nd out there, and that was where the bearish engulfings really stood. Bearish engulfing started as well right here at 1:30, so that level of 1677. Now, if we go from that high all the way down to the low, what you'll notice at about 1674, just above that is really where the bears are camping out. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. Got the Dow up 151 points. Trade out at 15,454. S&P's up 18 at 1667. Composite up 39 points. Trading at 34.97. Russell 2000 leading the charge on the way up 11.8 points right now. Trading at 9.96. Google's up $9. Apple's up 4. Microsoft up 44 cents. Intel up 18. Cisco up 23 cents. Leading the charge to the upside. Valiant Pharmaceuticals, VRX, is the ticker symbol, up $10.9 out here. That's up 12%. They are, what do they do? They announced an FDA approval for Efinacaza. I can't really pronounce what it is they got approval for, but we'll take a look at the ticker symbol out there. Google up $9.50, Amazon up $7 and change here. You've got Tesla Motors having another nice day, up $5 and change. Bib, Biogen, BIIB, up about 2%, up $4 and change. Apple up 5. Tiffany up $3.78. That's up 5%. Netflix up $3, up 1.2% out there. Goldman Sachs up $2.64. Green Mountain Coffee Roasters, GMCR up 3.5%. That is up $2.50. To the downside, Exelon Corp, EXC, that is off 6% here this morning, down $2 and change. First Energy, FE is a ticker symbol. They're off 5% this morning, down $2.20. You've got American Electric, AEP, American Electric Power, off 2%. We've got, trying to find something other than Pro Shares or Direction Shares here. You've got NRG Energy off a couple of percent out there, but otherwise mostly green. If I take a peek in here on the Dow, or any Dow charts, the only Dow chart that is interesting, the only Dow chart that is red right now, down 9 pennies, is Procter and Gamble out there. Otherwise, the other 29 are off to the races. Now, let's take a look here. What we're looking at on my chart is the Nikkei 225. Now, this is a ultra short-term chart out here. This is a 10-minute chart. So the Nikkei, which we know has been just a major rocket ship out here, what it had completed here coming into the time frame of our time frame, so on East Coast time. This occurred here at 50 past the hour on May 24th. What it did was it formed a 1 to 1.272 A to B equals CD down. That price projection was 14,019. Actually got down to a low of 13,981. But what it did form there was it formed a little hammer candle. Now, as our markets were closed, they were open over in Asia, and that hammer candle was tested. It was tested yesterday at our time. It was tested at 8:10 at the open of the market in Nikkei, and you can see it was tested. The low of that was tested. It moved higher, and really the Nikkei, as you take a look at this chart here, really just kind of moves sideways to slightly up. So it was up 100 points or what have you. Now let's take a look at the changes over here to the daily chart. Now the the daily chart's not going to show that hammer candle because there is no hammer candle on that area. And so we can see the Nikkei, truly, down, as I say, 9% from its highs during that trading session of May 23rd out there. So the reports that the Nikkei is doing great. That's a question mark for sure out there. In any event, let's go take a look at some of these stocks here that are popping and dropping. So I want to take a look at Tiffany. Tiffany's out here. TIF is the ticker symbol. Thought I had that out here. Let me pull it up on my stock chart screen. TIF is the ticker symbol. And let's go see what Tiffany is trading into. It gapped up here this morning over its most recent bearish engulfing swing point. We'll see if that level is going to hold. So just give me a moment here to expand this stock chart. It does have some high volume lows down here, but let's take a look at what it's doing right now. So it had gapped up over the May 22nd area, which was a bearish engulfing. There's also a key reversal session out here. So it'll be interesting to watch how Tiffany actually trades today. The high of that session, which was May 22nd. Let me also just put a couple of other things out here on the stock chart here. Let me put this. That wasn't really what I wanted, but we got that on the screen here. So let's take a look at that, Tiffany. The high on May 22nd, 79.35. Right now, trading at 79.75. So it is over that level here, and that's the last time on the current chart where we saw the actual bears show up, and they showed up. And the reason why that's important, I think, on May 22nd is just simply we've got key reversal sessions all over the place out here on that trading session. So it'll be interesting to see now with Tiffany's being one of the equities that has a key reversal session, was in an extended overbought territory. We'll see if it's going to be able to close above 79.35. So even though we might not think of the blue box company as being a leading indicator to us, I think it is important for us to come back and take a look at where this closes today. If it closes back inside 79.35, that'll have to make you say, something to think about. Now, let's take this back even further out here, see what it's actually trading into. So it's now trading into the highs from 2011. Those highs look like they're in about the $80.99 range. So let's go ahead and let's put this on a weekly chart out here, get a better feel for what Tiffany is doing on a weekly chart, see if we can find any bearish candles out here. And you've got that bearish engulfing right here. It's the week of 11-11-11. How about that? So that says if that was the bearish engulfing, resistance on this on Tiffany would be the highest high of the candle that it engulfed. That would be the trading session right here of November the 4th, the prior week, $80.94. So far in trading today, it's gotten up to $80.87, so $80.94. It has not gotten up over that high. You can see here we've got a little bear sash candle as it was making its high back here the week of July 22nd. It is trading inside that. I believe it's trading inside. So another key area is going to be taking a look at that July 22nd weekly low, $80.64. So it's trading below that. So it has tagged that area. That's got 7 million shares out there. But, of course, we're in a shortened trading week out here. If it does close inside 80.64 at the end of the week, whether it's on light volume or not, if it's on heavier volume, more than 7.4 million shares, especially on a shortened trading week, that says that Tiffany would want to go tag that high of 84.45. If it rejects it on lighter volume, make sure that you would just simply take a look at Tiffany and adjust the weekly volume. Just divide it by 4, multiply times 5, just to compare volumes of July 22nd. So 7.4 million shares. Let's go see what it's actually traded so far during the session today. In just 11 minutes of trading, it's done 572,000 shares. So that's on Tiffany's, and one we should just simply put on our watch list here as it takes a look at that. Key reversal session from the day of May 22nd out there. Let's take a look at some of these other stocks here that are popping and dropping in the marketplace here. Joseph A. Banks, I believe that. Let me see if they were actually out with numbers or if they are coming out with numbers. Give me a moment here to go check out my chart here. So Joseph A. Banks, looks like maybe they are coming out with numbers after the bell. I think that may be what it is. So let's go see how they are trading here. JOSB is their ticker symbol. Now, Joseph A. Banks, this thing here, gaps up and gaps down pretty large. So I'm imagining these are earnings sessions as well here. January 28th was likely the last one, and that had gapped down with 4.9 million shares. So right now what it is trading into is an area of resistance. This is Joseph A. A banks again that we're taking a look at, JOSB. And let's put this on a weekly chart. Then we'll come back. Actually, we'll come back to this daily chart. So let's see what this is doing on its weekly chart. See where the bears are hanging out, and the bears really hanging out right about in this level here, we've got a couple of bear sash candles. Those are powerful candles. This is the October 22nd week. That high is 48.83. You can see at another bear sash right here the week of November 30th. So if we just simply draw a line across the charts out here, here's where the bears are hanging out inside Joseph A. Banks. It pushed up into that level on last week and rejected that area. Didn't set up any kind of bearish candle. We did get a little three... So let me see here. Yeah, right in here you've got that, we were talking about on that 30-minute chart, that morning star candle formation. Well, on a weekly chart, we've got that same formation that took place right here the week of March 22nd, March 29th, and April the 5th out there. So that's really where the bulls would be hanging out inside Joseph A. Banks, just in case they gap down after the market closes, before the market opens tomorrow. If they're gapping down, that is a level of support that you would be looking for inside Joseph A. Banks, right around that 39, 35-ish range, maybe as low as 38, 36. That's where the weekly chart has the support. Now, if we come back into the daily chart of Joseph A. Banks, again, JOSB is that ticker symbol. Let's go see where you've got a morning star reversal candle formation right here as well. So this happens to be during the trading sessions of April 1st. April the 2nd, and April the 3rd out there. So that says that based on the daily chart, you're looking at 38.36 as being a level of potential support. Now, with this high volume bar down here as well, which is from January 28th, any bad news says that Joseph A. Banks will make its way down into that level. So we'll see right now from a trading standpoint, not really giving us any kind of indication as to which direction it wants to move into, but if you were holding on to this equity, whether you were long, whether you were short, you want to be able to make sure that you're taking a look at both the bullish and the bearish case out there in the market. Let's take a look at some of these other stocks here that I have on my earnings tab. I think some of these are from last week as well. And if we take a look at, let's see here, let's ANF. What is that? Abercrombie and Fitch, I think. Let's go take a look at ANF. I think that is Abercrombie and Fitch. It is ANF. So let's take a look at this. This thing gapped down with huge volume on Friday's session out here. So as we pull this back, we know that Abercrombie and Fitch also, give me a moment here, Abercrombie and Fitch also had a fairly large sell-off on February 22nd with 13 million shares to the downside. That level there held as support, believe it or not, the top of that bar, 48.85. There were 13 million shares on that trading session, and then on Friday there were 10 million shares, so still not enough to punch it down. It has gapped down. I suspect that what Abercrombie and Fitch may do is come all the way back down into this area where it really broke out, which was November 14th, with 35 million shares out there. So volume, although large off of the top, what you want to do is maybe keep your eye on this one if it were to come back and test that November 14th area. Now, it's a wide gap, because the November 13th level, the top of that is $32.13, whereas the bottom of the candle that gapped up November 14th, that level is 38.86. So you'd have to really be careful in trading this and trying to buy that breakout, and that is on Abercrombie and Fitch. ANF is the ticker symbol there. Let's see here. What else? Ralph Lauren. I had taken my daughter out shopping this weekend, so I guess we're taking a look at a number of clothiers out here. Let's take a look at Ralph Lauren. Ralph Lauren had gapped down on May 23rd and did it with 1.4 million shares. That, you can see, was being held by the gap up on February 6th out there, that at 3.7 million shares. So the move down, I think that may have been earnings related as well, 1.4 million shares going against 3.7. So you can see this becomes a strong area of support for Ralph Lauren out there, and that being the high of that February 6th area, 179.90 out here. So what you'd really like to see is this somehow push lower. Again, RL is the ticker symbol that we're looking at if you are taking a look at it on your screen as well. I had a little shooting star candle out here, and that was on May 22nd, but I can see I have this green bar out here because even though that's a bearish candle, you still want to make sure that Actually, that was a bearish candle, period. Forget about what I was just going to say, because it was not that was a true shooting star because it was not a gap up there. So I think this green bars, this session right here, all that was really doing was just taking a look at this session right there, which was that original breakout. Not original breakout, but the most recent breakout from February the 6th out here. So Ralph Lauren, it would be nice to actually see this equity come all the way back down and retest that breakout from February 5th. So a nice buy on Ralph Lauren would be right around the 165.15 level, assuming that it is moving down there with light volume, and that light volume, your benchmark is going to be 3.7 million shares out there. Let's go take a look at the currency market here. Let's go see what we've got moving on inside the currency pairs. I mentioned that it was the U.S. dollar, Japanese yen that was on the move out here. So let's go actually take a look at that. We've got a 30-minute chart up here on the screen. Now, this is the U.S. dollar, Japanese yen. As we know, this thing has been on fire. And let me first switch over. Let me see if I can do that here by going and no, it's not on this. It's not on this tab here. I'll have to do it on another tab. One of the things, if you take a look at this, the U.S. dollar, Japanese yen, you're taking a look at two expansion patterns that this had formed recently. The first one was a three drive to a top pattern that worked slightly. Did not identify the top. Your first drive came in at about 10 o'clock in the evening on May 22nd out at 102.57. Your second drive that came in here was right around the 9 a.m. time frame, right around 102.53. And your third drive out here came in at about 2:30 on May 17th out at about 103.29. You can see how that three drive did work, and you moved back. You didn't move back as far as you might normally on a three drive pattern. Then it makes a little bit over 1.272 butterfly expansion before it started moving down. Well, this is going to be important to watch because it made its first Gartley sell pattern that truly worked out here. And now we'll go see if it's going to make maybe another Gartley sell, and that's the U.S. dollar, Japanese yen on the 30-minute chart. 877-927-6640.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Right now, the Dow is up 173 points out there, trading at 15,476. S&P up 20 at 1669. Composites up 48 points at 3507. And the Russell 2000 up 1 0.8%, up 18 points right now, trading out at 1,002. Leading the charge is Google up $14. Priceline up 14 as well. To the downside, Netflix has flipped to the negative. They are down $3.65, and Exelon is down $2.18 out there. $2.18. That ticker symbol is EXC. We were taking a look at them. We are taking a look at the U.S. dollar, Japanese yen. So we're looking at the two expansion patterns, and we know if we take a look here at the. Let me flip over here to the other tab. Let's take a look at the longer-term chart of the U.S. dollar. I'm sorry, of the U.S. dollar, Japanese yen. Let me put the. Where's that chart out here? So here's the daily chart of the euro. Of the U.S. dollar, Japanese yen. So we can see that this thing has just simply been a rocket ship. We did see it move off of the lows big time from September of 2012 out at 77.12 all the way up to the 103 level out here as it was making that move into the 103 range. It certainly was in the overbought territory. Made a little bit higher high out here with less relative strength. Now, so on the weekly, we also know on the monthly out here that this thing has run into the descending trend line out here. Let me pull up the monthly chart so we can see that it ran right into resistance of a very long-term descending price channel. This one going back into 1998. So it completed that move out here. Now what's key is taking a look at what's going on the intraday charts. That's why we're taking a look at the 30-minute charts. We're taking a look at those last two expansion patterns here inside the U.S. dollar, Japanese yen, and now what it has completed its first Gartley sell. That's not an expansion pattern. That's where we saw the move off of that 103 level. This actually coming in the high during the 30-minute session at 1 p.m. on May 22nd as it got up to the 103.72 level. Then it makes a waterfall cascade, makes a low, gets into the oversold territory as it makes a low at 5 a.m. on May 23rd. And then what it does is it forms its first A to B equals CD up. That A point being the low that came in at 5 a.m. out at 100.82. That's your A point. Your B point was your swing point that took place at 7:30 a.m. out at 101.83, and your C point was about a 50% retracement. This made a 1 to 1.272 A to B equals CD pattern out there. That price projection was 102.58. It got up to a high of 102.576. You got to love that. So it makes a 1 to 1.272, and as it was doing that, it was also making a 0.618 retracement. Now, normally your expectation of these are that it's going to retrace from your A to your D leg to about the 0.618 level. Well, it did more than that, sliced through 0.618 with a wide-ranging bar and made a 100% move of a move. What does that mean? That means that price moved all the way back to that swing point low from 5 a.m. out at 100.82 out there. We can see that that's what the U.S. dollar Japanese yen did. It completed that move at 2:30 in the afternoon on May 24th. Then we saw a little bullish engulfing candle that took place at 3 p.m. out here, and that's the level that has held as a support. So support now inside the U.S. dollar Japanese yen on the 30-minute basis is going to be 100.65 out there. No real A to B equals CD up at this point here that has been created inside this. All we can take a look at is from the retracement from the high to the low out here. And my goodness, time just simply absolutely flies, folks. It is Terrific Tuesday. Stay tuned for the Money Masters show. That is up next. I hope you had a great weekend, folks. And I'll look forward to seeing you in a few or seeing you tomorrow morning. Take care, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.